Hey everyone, it's July 3rd, 2025. Here's what impacted mortgage rates this past week. This was a big week for jobs data, and that always plays a big role in what happens with mortgage rates. Here's a breakdown. What factors helped mortgage rates? Well, we saw private jobs report from ADP showing fewer jobs were created than expected, actually a drop of 33,000 jobs instead of a gain of 95,000. Wages and hours worked, according to government jobs data report, came in lower than expected, a sign that the jobs market may be cooling off. And more people are staying on unemployment with nearly 2 million continuing claims, trend that's actually been growing the past few months. So what hurt mortgage rates? Fewer companies laying people off. There were more job openings than expected, suggesting companies still want to hire. The jobs report today showed 144,000 jobs being added in June, better than 110,000 expected, but about half those jobs were government jobs. So what about stock market vibes? The stock market is still in party mode. The Nasdaq and the S&P both hit all-time highs today, and the Dow's far behind. Tech stocks continue to march higher, and when stocks go up, this is usually bad for mortgage rates. Fed and rate cuts, what does that look like? Well, Jerome Powell is still playing it safe, and the odds of a rate cut in July are now only 4.7% as of today, down from 24% yesterday. In short, no big moves are expected from the Fed anytime soon. So, what about mortgage rates? Well, they've been hovering in the mid to upper 6% range on 30-year fixed loans. Not much change, just slightly higher. Bottom line, jobs data was a mixed bag. The stock market is still on fire, and mortgage rates are holding steady but slightly moving higher. So if you're thinking about buying or refinancing, now's a good time to talk. Just send me a message. I also want to say happy Independence Day, everyone. Enjoy your 4th.